Hey, welcome to SumZero. Today we are going to be talking about Canary Digital, which is a crypto fund. As you guys can see in the slide deck, macro meets crypto. I think this is going to be a fascinating discussion. I'm sure many of you watched Bitcoin like rip in November when Trump got elected, and we're kind of wondering, like maybe this is kind of a good time to potentially consider crypto as an asset class. Historically, obviously, it's been super volatile, but there have been a lot of regulatory changes of late that I think are worth kind of a deeper dive. And we think Canary is a great sort of fund to kind of get exposure. So just quickly on their founder, Stephen McClurg is founder and CEO of Canary Capital Group. Previously, he co-founded and served as CIO at Valkyrie Investments, where he helped launch notable digital asset funds, including one of the first U.S. spot Bitcoin ETFs. He was also managing director at Guggenheim, overseeing portfolio strategy for fixed income and private equity, and founded Theseus Capital, later acquired by Galaxy Digital. He holds a Master of Science and an MBA from Pepperdine, where he's taught as an adjunct. Josh Olszewicz is VP and head of trading at Canary. His background, he's got over a decade of experience in digital assets trading and analysis. Before Canary, he was head of research and a portfolio manager at Valkyrie as well, led the crypto research team at Brave New Coin, and was a portfolio manager at Techemy Capital. Olszewicz is widely recognized for his expertise in cryptocurrency markets and technical analysis. So just quickly, we're going to go over a bunch of macro stuff, and also catalysts that might be relevant to crypto investors and obviously the regulatory landscape. So plenty to talk about. Maybe guys, as a start, maybe just kind of quickly talk about like what compelled you guys to start Canary Digital, and then we can dive in deeper from there and cover all the topics in the presentation.
Sure. Thanks, Divya. Do you want to start, Stephen?
Steve, do you want to go get your video on as well? I think your video is hidden right now.
Yeah, my video won't work right now for some reason, but I will go ahead and start, and then Josh is going to lead most of it, and then I'll just interject. But I'll start off by talking about why we started Canary. So when we were at Valkyrie, our primary focus was actually ETFs. We really wanted to bring a Bitcoin ETF to market. We did eventually do that. When BlackRock jumped in, we knew that everybody was going to lose to BlackRock, but we did have other incumbents that wanted to enter into the U.S. So the largest European crypto ETF company wanted to buy us. So we sold the ETF business to them, and then we actually kept our hedge fund. So we started Canary, Josh and I, to essentially have a vehicle to run our hedge fund out of. We wanted to continue on the track record that we had started in January of 2023, and we've continued that on. That was originally going to be our main focus, is just run a hedge fund, but of course opportunities arise, and we've gotten into other areas too, such as ETFs and SMAs. So since we started the company in September, we've already gathered about, I think we're over 300 million, which is a pretty good start after only 9 months, and we continue to grow. So that's really the impetus of starting Canary, was focus on an actively managed crypto asset management business, which is really where Josh and I have real expertise.
Are all of the assets in the fund like publicly traded crypto tokens, or is there some element of this that's private as well?
Yeah, we do have a very small piece that can be allocated to private placements. We want to keep that under 5%. I think at the moment it's more like, well under 1%. So we're not a big VC firm at all, but
Steve, you're cutting out.
But for the most part, I'm going to let Josh talk because I am not experiencing good reception.
Sure, yeah. So most of the fund is liquid. Originally we started this to target GBTC, which was a discounted trust to have, that later converted to an ETF. So we had the double whammy there of getting the upside of Bitcoin along with the 60% discount, which closed to zero after the conversion there. So that was the initial target. We initially sort of positioned this as an opportunistic fund. There are still some of those discounted funds today that are still live. BitW just got approved yesterday. That's a basket fund that had a discount up to 20% as of a couple weeks ago. So as these convert to ETFs, which we think they will, thanks to the regulatory clarity that we're seeing from this administration, those discounts will close, and then we'll capture, the discount and ideally additional upside asset movement.
So let's like take a step back. Well, I want to get into specific situations later. I'm going to have to ask you guys about MicroStrategies because it's like it's like in the headlines all the time. But like, what is your take on the macro backdrop today, and how does it impact Bitcoin specifically, but then also everything downstream of Bitcoin? There's like thousands of tokens out there, many of which I think are complete vaporware, but some of which may be legitimate. And so I'm just curious, like, if you can talk through the Genius Act a little bit, maybe talk through who you think the prime beneficiaries are of that regulatory framework. Let's start with that, and then we can kind of drill in deeper on specific opportunities you think are interesting.
Sure. So at the highest level, people try to put Bitcoin in a bucket. Is it tech? Is it VC? Is it commodity? Is it FX? Is it one of the Mag 7, Mag 8? But ultimately, what has driven Bitcoin crypto is global liquidity. So if you are of the mind that you think global liquidity by any measure is rising, then Bitcoin should benefit. And eventually, as you said, some of the altcoins will benefit, which is what we're seeing right now.
But Josh, doesn't that's like a rising tide lifts all boats for all risk assets? I mean, obviously, like, there are a lot of people out there who are making the claim that this thing is going to 1 million or whatever. And so what's your take on global liquidity? Why should it disproportionately benefit Bitcoin, I think, is the more central question.
Sure. It's a really good liquidity sponge. It is a global asset. It's 24/7, 365. It has the ability to disproportionately have upside because it is a limited supply. And the ETFs fuel that. Previously it was retail up until 2024. One of the few asset classes where retail beat institutions to the punch, and I think they're still in some degree beating institutions to the punch. But there's that piece of it, and there's also this other piece of this libertarian bent and or going against what the institutions are doing. Look, if you think everything's perfect and the central bank's awesome, right, then buy the long end of the curve and just pray. But if you don't think that's the case, this is one way for chaos insurance. It's one way to hedge against the inability of central planners to do what you think is right. Not to get hyper political, that's not really why we're here, but that's also a part of it. That's also fueling this, and that was the initial impetus why Bitcoin was created in 2008, 2009, out of the Occupy Wall Street type movement. So it's a bit ironic that we've gone full circle and now we're on Wall Street with the ETFs, right, and these Bitcoin treasury companies. But that's a big part of it too. So there's it's a multifaceted situation. And back to the FX component, seeing the dollar drop the fastest it's dropped since, like, I don't know, 1975 year to date, that's also helping to fuel all of these Bitcoin treasury companies, altcoin treasury companies. It's just an easier path of least resistance when the dollar is declining at the rate it is.
Can you connect, I'm just looking at your slide, expectations around rate cuts this year and the price of Bitcoin? Like, what's the connection there?
Yeah, so on the macro side, all of this stuff, feeds into market expectations of where do we think the risk-free rate is. Is it risk on or is it risk off? Are we better, in T-bills? Are we better in tech stocks? Are we better in IWM, Russell 2000 type stuff? So what we continue to see and continue to hear from this administration is, they want rates cut to the bone, cut to 1%. Who knows if we're going to see that? But the market is pricing that in that, this is the CME FedWatch graph, if you've never seen this. And what it's showing is the meetings on the left side here. And these percentages are odds for a cut or a hike at the meeting. So currently the next meeting is next week. That's a 95% chance of no cut, no hike. So that's saying Powell is unlikely to change rates at the next meeting. Meeting after that, though, in September, there's no meeting in August. That's Jackson Hole. That's what the market's currently pricing in, an expectation of cuts. Now, these are rarely correct, but this is where the market is at. The market is not expecting hikes here on rates. It is expecting cuts. And knowing that and understanding that can help give you some idea of like, okay, why is meme stonk stuff back, right? Why is GoPro up 60% overnight? Why is Kohl's up 100% yesterday? Like a lot of that's Wall Street bet stuff, sure. But there's also this animal spirit component, which is certainly in the market right now, and that's also fueling on the altcoin side, which we'll get to, this resurgence of rotation from Bitcoins to altcoins. So if you have an idea of at least where the market thinks we're going, right? There's where the market thinks it's going, and then there's where we think it's going, which we don't necessarily disagree with the market. Stephen would say that he thinks rates should come down a little bit, maybe not 1%. The market is expecting 2 cuts by the end of the year, and then of course there's been a lot of what Trump has said in the news and lately about wanting to get rid of Powell and who's going to be his replacement. And Powell's term ends in May 2026, so the market is pricing in further cuts after that, right? So at some point here we reach this convergence of, okay, everybody knows Powell's gone, who's going to replace him? What's the next guy going to do, right? Like that's where we're at right now in the market, and the market is saying we certainly expect rates to come lower.
So Josh, the last time, I guess the initial moment, I forget when this was exactly, when there were a lot of headlines about Trump wanting to fire Powell. Bonds sold off, yields went up, and so the question is like now, a lot of those conversations have resumed, and I've been seeing headlines where the headline would be something like Powell's about to resign or something like that, and yields have kind of stayed flat. And I'm just wondering, like, do you think there's a risk just purely on rates that they go higher because Trump tries to boot Powell? Or do you think that markets at this point don't care because he's going to be gone anyway in less than a year? Like, how do you think folks are thinking about this kind of aggressive?
Let me interject there. So what's happening is the market is driving the 5-year, the 10-year, and the 30-year. Those aren't being affected as much by the Fed rate. So that's actually more affected by the balance sheet of the Fed, which is continuing to slowly unwind. And then, of course, the market deciding where rates should be. So the 30-year, for instance, is right around 5%. The 10-year is right around 440. The 5-year is at 390. Those are market driven. That's what the market's demanding. But the rest of the curve is really being put out of whack by the Fed. So once you get down to the 2-year, then rates start going up again, which isn't a normal rate curve, right? You should get rewarded by holding your capital in longer duration assets or longer duration bonds. But once we get down to the 2-year is really the bottom of the curve. And then we go back up at the 1-year, the 6-month, and the 3-month. And of course, even the Fed funds rate is at, 4.5%, but that's their target. But the actual rate's at 430, which shows that the market's trying to push that lower part of the curve down. So any of these announcements around the Fed rate or Powell isn't having the type of effect that it should have or that it could have on the longer end. It really is the shorter end of the curve that we're concerned about at the moment.
And as far as Bitcoin pricing, why does the short end of the curve matter? That like, does it matter, or is it kind of at this point not really?
Well, Bitcoin price really is affected by the entire curve. So for instance, the short end, the lower rates go, that's really more easy monetary policy, which means that it creates higher velocity of money, right? And then when the Fed buys on the balance sheet, right now it's unwinding, but when central banks are buying onto their balance sheet, that's essentially creating money. So the two parts of M2 global monetary supply is purchasing of assets and creating new money, and then easy monetary policy at the short end, which affects the velocity of money, which are the two main factors that go into M2. So Bitcoin typically tracks or has a high correlation to global M2. And based on history of that correlation, Bitcoin should go to about $140,000 a token based on current global M2 supply.
Interesting. And you have some analysis around that. Just like what I mean, where are you coming up with that? Is that sort of like tracking just M2 supply over time and correlating that with Bitcoin price? There's something else to that,
That's
or what's
exactly right. Yeah, very simple model.
Mm-hmm. Now, do you guys like do you guys hold Bitcoin in the fund, or is it really kind of the rest of the crypto market that you're more focused on? Like you guys mentioned, some of these kind of closed fund situations that trade below NAV, and what would you say is sort of the core focus for Canary itself? I mean, most people don't necessarily need to invest in a fund if all they want to own is Bitcoin. Like in theory, they're going to want something more sophisticated and managed, where there's So I'm just curious, kind of how the portfolio is architected in terms of things that are not Bitcoin.
Yeah. So Bitcoin is a large portion of our fund at the moment. And what we typically look at is three different factors for risk, right? So we're looking at overall risk of the markets that affect risk assets. So when we see that risk is high and risk assets are likely to be volatile or go down, we start moving into treasuries. And we're not 100% treasuries, but we'll keep a large core crypto position and trade around it. The other risk that we're looking at is within the crypto markets themselves. So Bitcoin is generally if I hate to say it like this, but it's probably the best way to describe it. Within the crypto ecosystem, Bitcoin is the risk-free return. Now, it's not risk-free, obviously, but it is the basis. And then altcoins typically additional risk and will typically outperform Bitcoin when markets are ripping and underperform Bitcoin when markets are going down. So when we are more allocated to crypto or more allocated to risk, we then look at measures that look at Bitcoin versus altcoins. And there are patterns there as well that we're constantly looking at. So for instance, right now we have a very large allocation to Bitcoin, but if risk appetite goes up within crypto, we start pulling out of Bitcoin and moving more into altcoins, and then vice versa. So it really is those three different layers of risk that we're looking at.
Have you guys increased any exposure to Ethereum given the Genius Act? And maybe you could just talk about the act itself and who you think the beneficiaries are.
Yeah, as a matter of fact, we've actually reduced our exposure to Ethereum based on the Genius Act, because what happened was there was a lot of speculation in buying Ethereum. So Ethereum went up higher versus the rest of the market coming up to the Genius Act. And then once it passed, Ethereum looks a lot weaker. So
Josh, maybe you can fill in here. So, see if you're cutting out.
Yeah, so on my focus is always technicals first. So yes, we have this regulatory tailwind that has clearly helped. But what happened first was the technicals started to flip bullish on specifically the ETH BTC ratio for the first time in 4 years. So that's what positioned the fund into ETH in the first place. And Stephen and I are both reticent to position heavily into any altcoin for any reason, but that was the first step, is like, okay, we assumed this was going to pass. It did, great. But well before that, the technicals on this trend specifically was flipping in favor of ETH. This is the Genius Act, if you're not aware. It was signed into law. Like I said, it's focused on stablecoins. Stablecoins are a digital representation of a dollar. They typically hold a reserve. In the real world, the physical world, they hold a dollar, usually in short-term treasuries, in a bank account somewhere. It's kind of been a gray market with Tether for a very long time. But the Genius Act brings this stuff onshore, make sure it has a full reserve backing. There's regular audits, reserve transparency, It permits banks and businesses to issue stablecoins as well. So you're seeing a ton of that in the news. Everybody and their mother is issuing a stablecoin now. And the last thing on this, they didn't want to add a passive yield, so it forbids that. However, there's other incentives that you can there's ways to work around this. Or for example, if you hold USDC in a Coinbase account, they will give you the yield. It'll get passed on. But there's no passive yield products, at least with onshore stable coins.
Sorry, Josh, can you say that again? You're saying if I buy USDC in my Coinbase account, Coinbase is giving me a yield on my USDC, even though the Genius Act forbids that? Am I hearing that right?
So my understanding of the Genius Act is there's no built-in passive yield. So for some of these coins on chain passively, they will accrue money daily, just like a money market fund would. The regional banks specifically were worried that this would put them out of business. So the reality is it's going to eventually eat away at banks. It just does. I mean, it's just a better product. You can send it anywhere you want, 365 globally. There's no KYC. We can, debate whether that's good or bad. But currently, Coinbase being one example, Kraken another, where you can hold USDC or Kraken's stablecoin USDG, and they will give you a yield on that. They're not going to call it yield necessarily. They're going to call it something else, opt-in rewards, staking. I don't know. Right?
Yeah. Is that yield competitive with what the money market rate you would receive if you would just put cash in a money market account?
That's correct. It is the rate.
Is that rate? Okay.
Yeah.
So what is the story? Sorry, this might be a little bit of a digression, but a lot of folks were watching the Circle IPO, and I think were confused by the business model and just so like are they earning just a spread on every dollar that people put into USD? Or maybe you can, I don't want to speak for you, but maybe you can educate the listeners on like what exactly Circle does first, and then I'm not even sure if this was on your radar from a portfolio standpoint. I mean, it was just a fascinating thing to watch something shoot up like a rocket ship that quickly post IPO. So yeah, would love to hear what's going on over there.
Yeah, I think a part of that was also just the market is starved for things going public, and it's sort of right place, right time. It's IPO, it's crypto, it's hot. It's also like the company itself is like a money market fund, right? Like they don't do much other than that. And so yeah, you're not wrong. They earn the spread on what people aren't earning on USDC on Coinbase or wherever else. Most of their business model is shared with Coinbase. Most of Coinbase's income is USDC related in some way. So I don't understand why the market loved it as much as it did. But again, this regulatory thing, stablecoins were in the news, I don't know, every day for like weeks leading up to this. And then we get this stablecoin company coming public and everyone's like, okay, I know what to do with that. This is great, right?
Just on their business model, like when you buy USDC, let's say you do it on Coinbase, like is Circle somehow making money off of that or not? Like that's what I'm trying to understand. Like it would seem unsustainable that they could be issuing this dollar-backed product or dollar-backed stable coin and earn a yield on the dollars that people are using to fund the stable coin and not have to pay any expenses associated with that. Like meaning not have to pay interest on the actual stable coins that these people are buying. That seems a little bit counterintuitive to me as to why everybody would do that.
Well, think about it like this. I mean, I used to manage mutual funds.
Steve, if you can find a better reception spot, I don't know if there's a place where you've got better reception. I was going to take it. Yeah, I was going to take it to the extreme. So Tether is the most profitable business on the planet. I don't know how many employees they have, maybe 30. Okay. They're holding a majority of the stable coins globally. I think it's around 160 billion now. They pass 0% of the yield that they're getting on their stack of money, right? So that business is highly profitable. Now, if you go down the stack a little bit to Circle, they hold less. I forget what the exact total is here, but their business model is we're going to give you a stable coin. You're going to give us $1. We're going to put that dollar into a treasury, and we pass some of that yield on along to other people. I mean, that's the business in my eyes. So, beyond that, I don't really know.
Yeah. Yeah. It seems like really like unsustainable to me, but I don't know the shit. I don't have any skin in the game, so I'm not sure that my comments really matter. And then, so what is the Clarity Act?
One last thing I'll say about Circle is they also have the regulatory blessing, right? So Tether doesn't quite have that regulatory blessing yet, even though Paulo Arduino was in the White House and, President Trump named him specifically. Well, the country loves stablecoin. The government loves stablecoins because it buys short-term debt. It absorbs all this issuance that we're spewing out there, right? So that's very good. It also promotes the dollar globally. You and I, we might not have a lot of use for stablecoins because we have PayPal, Venmo, Zelle, right? Cash App. To Americans, it's like whatever, no big deal. But if you're sending money overseas, or if you are in a country with a poor fiat currency, you're loving this because it's a savings account, right? Even if you're not getting the yield, you still have exposure to the US dollar.
Correct. Yeah.
Yeah.
Oh, yeah. I think the international case and the cross-border case is huge. So there's a question actually from somebody in the audience. Any perspective on related offerings from Ripple?
Yeah. So Ripple, their focus has always generally been more bank facing and like bank to bank payments. Very big in retail as far as trading is concerned. They, like a lot of other companies, have spun up their own stablecoin and are trying to get in the game along with everybody else.
What's that called?
It's what is it? I knew you were gonna ask me this. It's like RLUSD or something. Yeah, that's what it is.
RLUSD. Yeah.
RLUSD. So you and I, SumZero could spin this up, and it's getting people to actually use it. One of the reasons why Tether is so successful is because literally in South America and Asia, they're in their stores, things are priced in Tether. I mean, that's just the way it is. It's become a unit of account method of exchange overseas. So it's super, super popular. I think it's harder to get newer stablecoins to that level. One other thing we've also seen just yesterday, Polymarket, which is a super popular betting platform.
Betting site, yeah.
They announced, they're going to bring their own stablecoin to market as well. So spinning this stuff up is easy.
The reason they're doing it is because they want to earn a spread on. They want to borrow at 0% and earn the money market rate. That's kind of right.
That's what everybody wants to do.
That's what everyone wants to do. Yeah, it seems a little suspect, but then again, like I come from like a pretty old school background as far as this sort of stuff goes. But
it's just think of it as a digital money market. It's a tokenized money market account. That's all. It's not more complicated than that. What the Genius Act does is just make sure that this isn't another Tether situation where there isn't murkiness around the reserve backing. Tether has had issues and the peg has dropped, and we can go into that if you want, but this helps prevent that.
Yeah, which makes sense. And so onto the Clarity Act, it sounds like this is in the works. What is it?
Yeah, so previously with the Gensler SEC and prior administrations, they have told crypto companies to come talk to them, right? They've opened their door and they've said, come talk to us about what you're doing, and we'll tell you what's right and wrong. And business after business would go to them, and they wouldn't really get straight answers. And then they'd get served a Wells notice, which is a pre-announcement that the SEC is suing you. So what the Clarity Act does is, instead of regulation by enforcement, which is what that was, this is legislation getting put forth that says, okay, these are what tokens are. Are they a commodity? Are they a security? These are the conditions at which that delineation happens based on, they're still drafting legislation. Is it going to be token supply? Is it going to be some other test based on age, based on age of the chain? They're going to specify here what exactly they're looking for. But depending on which bucket you fall under, you're going to be a commodity, which is where Bitcoin is firmly at, or you're going to be a security, which is probably where more of these ICOs back in the day would sit. And then that's going to that downstream, that's going to be, where these products end up in your brokerage account. Are they going to be an ETF? Are they going to have certain products and features beyond that?
What's the story with Ethereum in terms of being a commodity versus security? Because you can stake Ethereum. Does that mean that it's more of a security than a commodity? Like, what's their thinking on Ethereum? Because I think you're right. Like Bitcoin is kind of firmly in one camp, but Ethereum's kind of the number two. And I'm just curious where that, and Solana is another big one. Like, where does that fit? Do you have any thoughts?
Yeah. So previously, Bitcoin, sort of lightning in a bottle, created, put out in the world. There was no pre-mine, is what it's called. There was no VC allocation. There was no ICO. Okay, so that's more commodity-like, and certainly under the eyes of the SEC, it's more commodity-like. When you get into the pre-funding model or ICO model, initial coin offering model, that leans towards the security side of things. At least that was the stance previously by previous administrations. So that would be Ethereum, that would be Solana, that would be many of these tokens that have come to market, which is where a lot of them sort of got into trouble. There had been talks of ETH sort of maturing again, this term of like how far from the ICO, or like what conditions need to be met based on insider allocations to mature beyond a security. Staking was also another bee in the bonnet of the regulators, because they had previously said that this was an investment contract and that would make it a security. The current administration has said both that ETH is not a security and that staking is not a security. So that would put it in the commodity camp, I guess. But the jury's still out on that, exactly what they're going to say. Nevertheless, there's an ETH ETF that's already at market, right? We don't have staking in the ETFs, which is likely what we're probably going to see with the Clarity Act, and that's across any stakeable network, including Solana, including ETH. And the other thing we're probably going to see, which we haven't, is in-kind create redeem, which is sort of this piping issue on the ETFs, kind of in the weeds here. But the way it currently works is you have to have cash and then buy the tokens versus sending the tokens directly to these ETFs. And at the end of the day, all of this just means there's going to be lower friction for these products, lower fees for these products, yield for these products, and you're going to see more products. You're going to see more altcoin ETFs come to market.
Yeah, I just wonder how they will be received, because it seems like there's just such a almost like winner takes all market structure within crypto, where you've got Bitcoin and Ethereum being like the lion's share of like actual market cap. Stablecoins is a different thing, but as far as these other altcoins, it's unclear to me like how many of them actually matter, why they have the value that they have. Are there some that kind of ring out to you as being like truly sustainable over time with like in 10 years, are we going to be talking about Ripple? Are we going to be talking I'm just curious if you have like a set of durable cryptos where if you were a long-term investor and not just like a day trader, that you would just kind of sit on indefinitely because you're seeing like actual engagement and traction with usage and all of that. Just what sort of sings out to you as being like, something that you would expect to see survive over the next crypto cycle, the next crypto winter, et cetera?
Sure. So collectively, I would put altcoins in a liquid VC bucket, where, like you're saying, some of these could go to zero, some of these could 10x, right? So there's definitely that component to it. This tends to be cyclical, where once every 4 years, we see this upswing in altcoin speculation. I'm just trying to pull up a slide real quick that shows that. So if we go now to what we're seeing, this is the total crypto market cap on the left, and you can see this ebb and this flow. Most of this, of course, being Bitcoin, a little bit being Ethereum, Solana, and Ripple. One of the issues that altcoins have is they're all competing for the same people, dollars, eyeballs, developers, attention, right? So it's a little bit of a zero-sum game for some of these. I think Solana is another great example of a coin that we're going to be talking about in 10 years. I think it's going to be here with all of these unlike Bitcoin, there are issues of centralization to varying degrees, whether that be the token supply, whether that be how the network runs based on the validators and proof of stake, and we can go down that rabbit hole. So that also delineates a lot of these from the rest of them. But the market has clearly said, from a retail perspective, we don't care as much about decentralization. We want fees to be as low as possible, and we want transaction speed throughput to be as high as possible. So knowing that, which is the trilemma, knowing that Solana has been the winner of retail. It's been the retail speculative vehicle where a lot of these new tokens get issued on top of for tokenization. Ethereum has always been around. It has a lot of like technical debt at this point that is built up. It's complex. There are issues with using layer twos, which are networks on top of Ethereum for cheaper transactions. I saw this the other day. Somebody said, if you're bullish on ETH, just don't use the chain because it's cumbersome. It's cumbersome.
The thing about Ether is that 90% of the stable coins are built on Ethereum. So if you think stable coins are going to grow over time in usage, like, does that mean that the value of Ether goes up or not? I mean, what's your kind of high level take there?
So I'll say there's actually a lot more on Tron, which is more of a Asia focused network, at least on US at the moment. But there's a lot of stablecoins on Tron, more than you'd expect. There's a lot of stablecoin activity on Tron, more than you'd expect. I think it's actually higher on Tron than Ethereum. So yes, Ethereum is going to be successful. It's going to have tokenization. It's going to have stablecoins. It's the de facto leader, right? The issue is actually using it. It's a little cumbersome, especially comparing it to Solana, which is a little newer, it's hotter, it's fresher. It's what the kids are using versus Ethereum.
I think your point was that it's more centralized.
It is. I would say it's more centralized by measures of looking at who runs the network, the validators. It also has periods of downtime, which isn't something that you typically want with a decentralized network. It just sort of is what it is, right? Like, look, it's more centralized than ETH. ETH is more centralized than Bitcoin, in my opinion. Sol has a majority of retail activity. That's just
and can you explain what people are using Solana for? I mean, outside of speculation, like what is built on Solana?
Yeah, so a lot of it, if we think about 2017 and the ICO craze on Ethereum, a lot of that was regulatory arbitrage around, getting around the SEC at that time, right? That's what a lot of the activity was, spinning up these businesses for ICOs. Today on Solana, a lot of it is tokenization. A lot of it is speculative gambling. It's not necessarily pretty when you're looking under the hood and what people are doing, but that's where the party is at. The party is at Solana. If you're a retail participant, you like using that chain for its speed and its ease of use. You don't need an L2, for example. It's less cumbersome than ETH. So if you're using a chain that has tokenization, many people just prefer Solana. That's just the way it is. And again, a lot of that is gambling speculation. That is a killer use case for Solana, undeniably. ETH probably leans more.
Can you explain what you mean by that? Like gambling tokenization? Like, are you talking about the poly market stuff, or what are you referring to more specifically?
Yeah, so you or I on this call could create a SumZero token, and we could sell it on a decentralized exchange on Solana. Pump.fun is one example, right? That has seen a ton of activity. That has seen a ton of eyeballs.
And what is that? What is pump dot? Like, what is that?
So you create a token, list it, and it's a meme coin. It's valueless, and that's what retail is focused on. They really love gambling on penny stocks, right? Like that's basically what this is. It has no business, no value. That's just where the market is.
Yeah. And the current administration has no issues with those kinds of securities, if you will, like that. Like that, there's nothing. This guy actually, one of the listeners described it as digital hot potato, which I think sounds spot on. Is this something that's like in the clear from a regulatory standpoint?
I believe what they have said is meme coins are not a security. I believe that's the delineation. So no, they're not going to go after this stuff.
Yeah.
Based on what I've seen.
Drew just mentioned they're collectible.
Yeah.
So I mean, this almost sounds like the new NFT, or like maybe a new iteration of the NFT market that kind of came and went in 2021 or whenever it was.
Yeah, if we look at the dominance chart on the right, this is Bitcoin market cap versus all non-Bitcoin cryptocurrencies. What we tend to see is this narrative where, again, once every 4 years, stuff happens. 2017 was ICOs. 2021 was a lot of decentralized finance, DeFi, and NFTs. This go around, it's meme coins, it's crypto treasury companies that is fueling moves out of Bitcoin into highly speculative stuff. And I'll just say this is no different than if you look at the Mag 7 versus IWM, right? We're seeing broadening not just in crypto, we're seeing it in the legacy markets. We're seeing money float away from the best businesses in the world that have ever existed into other stuff, zombie stuff, right? Like that's just the way that the market is at right now. So it's no coincidence that we're seeing that echoed in legacy markets.
Are you guys involved at all in the MicroStrategy sort of situation? I mean, this idea that like a public company buys Bitcoin, puts it on its balance sheet, and by doing so gets a multiple of the value of the Bitcoin as incremental market cap. Like, does that sound crazy to you, or do you think this is just like, this is the new norm? Like, or do you guys see that as a problem? I'm just curious how you guys think about it.
Yeah, so long term, in a bear market, if we think about Bitcoin or anything in finance, tends to be cyclical. We've tend to see this 4-year cycle in Bitcoin, right? So I think collectively we all think in a bear market this stuff's going to end in tears, but right now, play ball, right?
Okay.
So for MSTR specifically, the idea always sounded crazy to me, but then when you understand that there are certain pockets of entities that cannot buy Bitcoin directly, they cannot buy ETFs, they can buy MSTR. Look at Vanguard. Vanguard has a ton of MSTR on their books. There are pension funds.
Well, that's
MSTR.
because Vanguard owns products that are market cap weighted, and so
right. But also Vanguard bans people from trading the ETFs on their platform, the Bitcoin ETFs. So if you're on Vanguard and you can't buy the ETF, what's the next best thing? Well, you can buy MSTR, right? What can pensions buy? They can buy MSTR. What can people overseas buy? MSTR. It's a lot easier for a lot of people to buy MSTR than it is to buy the ETFs directly. Now that's changing. We're also seeing competition with other Bitcoin treasury companies, with other crypto treasury companies. That's going to eat away at the multiple on MSTR. MSTR has tried to bring more products to market, access to convertible bonds, the debt markets. That I think
they're using converts to buy Bitcoin. So they're like, I mean, selling equity and debt and hybrid securities to buy Bitcoin. It's like an incredibly levered thing. So did you catch the news on the Ether machine? This was a de-SPAC that just happened where the guy's doing basically the same thing, but with Ether. But I was listening to him on CNBC. He was saying, it sounds like they'll be transferring staking yields. It sounded like to shareholders. So if you own equity of this new public company, I think it's called the Ether machine.
Yeah, it is.
You would get some kind of yield, and I don't know how exactly that works because you don't own the underlying Ether. You own equity in the business, but maybe they take the proceeds from the yield and turn it into a dividend of some kind.
Right.
Any thoughts on that? Has that made any waves, or do you think that becomes another trend that people do this within the Ethereum world?
Absolutely. I mean, again, if you put it all together and you say, okay, Bitcoin, the ETFs were first, Bitcoin took off post-election, Bitcoin is at X level relative to alts, all of them collectively on a relative value. When is a better time to launch an altcoin crypto treasury? Is it today, or is it, when Bitcoin's at 60K? It's definitely today. And that's another reason why folks like Tom Lee have also entered into Ethereum. Joel Lubin has also, he's a consensus.
Yeah. What is Joel doing exactly? He was like an Ethereum co-founder, right? Didn't he co-found it? Yeah.
Yeah.
So what's he up to?
So all of these companies, their goal is the same as MSTR. MSTR has been a highly successful model, so they're modeling after that. They're also saying, like you said, ETH is a productive asset, so there's a yield component on top of that. There's clearly a stablecoin tailwind. There is a tokenization tailwind, which is coming, which is going to be likely dominated on Ethereum. So there are some reasons to really like Ethereum, absolutely. The one issue, the difference between Bitcoin and ETH is Bitcoin has a fixed supply, ETH does not. It has a burning component, sort of like a buyback mechanism, but it does not have a fixed supply. And one other thing to be careful of here with ETH, the more ETH that is staked, the lower the yield. That's just the functionality of the staking mechanism. So for instance, if we have ETF staking and we have Ether machine staking and SBET staking and BMNR staking, these are these companies, the yield's going to keep going down. So there's some dynamics here where it could work out for a little while and then we'll find out. Just to remind people of with MSTR in the bear market of 2022, MSTR fell below NAV. So currently it has a NAV of like 1.6. The NAV got as high as 3 in 2024, but in the bear market it was below NAV.
What do you think of the Chanos trade of being, short MSTR, long Bitcoin? Or do you think you get blowed up? Maybe the spread wide. What's your take on that?
So it's interesting. I listen to a lot of these financial podcasts with the big short guys. Most of them are terrible at trading, but they also loved this trade a while back, and they got blown out. I think it's a great idea. I agree with Chanos in that he's just doing what Saylor's doing with the ATM, where he's selling stock into the market and buying BTC. So it's fine on paper. The issue is the downside is 1 or less than 1 slightly, and the upside is unknown. There's some potential upside that's beyond what he's expecting. So I hope he's ready for that. But you can't disagree with the thought process. Absolutely. One other thing that's going to dampen MSTR's MNAV, which is the way that they describe the multiple here, is the competition of everything else, right? Just on a technical level, MSTR has looked really, really good and just went nowhere as the MNAV is sort of bleeding. There's a lot more competition, not only with the Bitcoin treasury space, but the just altcoin treasury space. We're seeing more and more of those pop up. So that's going to hurt MSTR just on a relative basis, right? There's just more competition.
What else should we cover? I know we've kind of talked through a bunch of things here. I think you guys, maybe it was Stephen who mentioned earlier on that you tend to think of Bitcoin as like the risk-free asset in the sector. So it sounds like it's almost a placeholder for periods of time where maybe you don't have like a high conviction trade that you want to put on. And I don't want to sort of speak for you guys, but it sounds like it's, maybe when you're not seeing big opportunities, you sit on a lot of Bitcoin, and then as stuff pops up that you think is interesting, where there's maybe some kind of arb, you sell some of your Bitcoin and fund new positions. Is that kind of how you guys think about the portfolio?
Yeah, I'd say the first focus and pillar is seek out discounted to NAV assets wherever possible. So
Yeah.
Looking to 2026 and beyond in a bear market, all of these treasury companies really excite me because that gives us a bigger investable universe to potentially target when this stuff is heavily discounted, which I don't think anybody doubts that it's going to happen eventually one day, right? I don't know about 2026, but whatever, maybe 2027. That's always the first focus. The second focus is Bitcoin. Can we use leverage today? Can we not use leverage today? What does that look like? Is that MSTR? Is that BITU, which is a leveraged ETF? Is that some other form of leverage? And then the third thing would be, if not, do we broaden out, which we have done recently, out of BTC into altcoins, where you're going to see higher beta, higher volatility, higher return, higher downside, all that stuff. But there's a time and a place for that. And a lot of people get into trouble because they're holding alts in a bear market, which you don't want to do because of the beta component. But that's how we operate the fund. Absolutely.
What would be kind of a signal to you to kind of get out of crypto from a sentiment standpoint? Like, I'll give you one interesting example. There were a lot of people who sold out of the market in terms of equities earlier this year when Trump announced tariffs. And, I think peak to trough, like there was like roughly a 20% correction in equity markets over a very, very short period of time in April, right? With global tariffs. Of course, May comes around, he announces a 90-day reprieve and markets rip back. So like in that moment, like would you have sold, like upon hearing about tariffs, like would that have been a signal to be like, oh, maybe we should reduce our exposure to crypto? Or I mean, I guess what would you have to see? What if Democrats win in 2028 and there's a total shift in the regulatory framework? Like, what do you do in that scenario if you've got a lot of crypto exposure? How do you think about that? Because it's the problem with crypto, I think for a lot of people, is that it's such a roller coaster ride and the moves are so violent that it's just very difficult, to know like, oh, do I just keep holding on? Like they have all these like kind of silly tropes for describing those moments, like diamond hands. You keep hearing about diamond hands all over,
Sure.
Twitter and whatnot. And it's like, when you have these assets where there's no clear like valuation floor, nothing would surprise me. Like Ether could go from 4,000 to 1,000. It wouldn't surprise me. It could also go to 10,000. That wouldn't surprise me either. So yeah, I mean, right now it feels like we're in sort of the heyday. It feels like super frothy, and there's a lot of crazy stuff going on. I mean, I think this Treasury trade is like dominating headlines. But like, what would shift your sentiment and make you kind of think, all right, now is the time to be more risk off?
Yeah, a lot to unpack there. I guess I'll hit on the ultra short term component of this. When the leverage carry trade unwinds, when there's a tariff headline, when it's the weekend, you got to remember crypto's 24/7, 365. So if you have risk on your book that you want to get rid of and you can do it on the weekend, you're selling Bitcoin. There's comparisons to gold versus BTC, and why doesn't BTC act more like gold if it's digital gold? Well, it can be sold any time for any reason. So if there's bad news, it's going to be sold. That's just the way it is. It's the first thing to be sold. It might be the first thing to be bought too. But that's why we see that ultra heightened volatility, even though Bitcoin is not a tariffable asset, which is why it's probably done better coming out of April than I think everything at this point. Maybe not gold out of April, but
that's an interesting point. Yeah, that's an interesting point about tariff. If you had to pick one, what would it be? I think earlier you mentioned you like Solana because it's actually got, engagement that is arguably more than some of the other blockchains. But yeah, if you had to pick one to own, let's say for the medium to long term, like which one would you pick? You also mentioned Tron, which I've heard of, but I don't know anything about. But I'm curious what your sort of where you have the highest conviction.
Sure. If we go back to the seasonality slide, just for ultra near term here, trying to game it out, which we're doing in the fund. Next week we have FOMC, we have GDP, we have PCE, we've got the QRA, the quarterly refunding announcement. So there's going to be a lot of potential volatility events next week. This leads into a seasonally bearish period for digital assets. September, August, typically very bearish for crypto. So if I was trying to like position a perfect portfolio, I would look to see what Bitcoin does in the near term. If it can break 120 or not in the next couple of weeks, great. I love BTC here. ETH has basically run straight up over the past couple of weeks. So like Steven said, we've been lightening our load on ETH over the past couple of days. I still think Solana has decent upside. It doesn't have ETFs yet. I think that's a great catalyst. It's not a great use case, but it's a great catalyst for prices lifting higher. And there's also some other, Litecoin is another one that is a proof of work chain, doesn't have staking, potentially is going to have an ETF here.
Isn't Litecoin just like a fork off Bitcoin?
It is. Yeah.
And with like smaller like bit size or something, like what's the reason you would ever use Litecoin?
So it has cheaper transaction fees, which Bitcoin right now is basically zero, and it's got faster transactions. It has 4x the total supply. It's still a fixed supply, but the idea there being was just Charlie Lee created a faster Bitcoin. That was the impetus for spinning.
Yeah. Which like arguably doesn't matter if you're not using Bitcoin for transacting and you're just, if you see it as digital gold, like you don't like care about the throughput or, transaction speed.
Right. You have to remember there's a reason why Bitcoin is dominant, right? Like it has the narrative, it has the users, it has the history, it has the brand. This other stuff has like edge cases. For example, if the Bitcoin network gets super expensive to transact, there's a spillway effect onto alts, specifically Litecoin, because again, it's fast and cheap. That's what people love when they're sending stuff around. Some people even today use Litecoin over Bitcoin to transact just because it's faster and cheaper.
Yeah. Well, Josh, we're running up on the hour here. We have a couple of questions we can end with on tokenization. There's one question on tokenization of stocks. I think the question is like, how will we see that? I mean, just maybe like to kind of to make it a tangible thing. Like it would be incredibly useful for equity investors in the US to be able to buy stocks in India and Sweden and Korea and other parts of the world without having a local brokerage account, in those countries, and vice versa. If you live in India and you want to buy Mag 7, you'd obviously want to be able to do that. When do you think we're going to start to see this happen? Like how's that going to work? Yeah, would love to hear kind of your thoughts on that.
Yeah, there have been proof of concepts that have come to market. The immediate one that comes to mind is Luna, which blew up. It was called Mirror Protocol. This stuff has been happening for a long time, just on a smaller scale. Now that it's getting the regulatory tailwind for it, they're called RWA, real world assets is the designation here. We're absolutely going to see that. And like you said, internationally, that's really where the biggest use case is. Maybe not even
which underlying blockchain would all of this be built on, most likely?
Either Ethereum on Ethereum L2, like Base for Coinbase, or Solana. I can't imagine this stuff going much past Ethereum. Maybe on stuff like AVAX. I'm trying to think. And some of the other similar networks, again, these are all sort of competing for the same type of
but for the sort of smart contract enabled blockchains, exactly. It sounds like it's Ethereum and Solana. There's no one else that's even relevant.
Yeah, the other thing I'll say about Solana versus ETH is because of the downtime problems with Solana on occasion historically. If you've got something in a funding element or that uses an oracle to speak to a DEX, like you do not want that going down ever. So you're gonna trust Ethereum with that way more than Solana, just because there are issues on Solana. It's it happens. But so I'd expect you can actually go. There's a website rwa.xyz. It tracks all this stuff. If you want to peek at what's going on in that realm, we're seeing a lot of the first step is like treasuries and stablecoin type stuff, but we're definitely going to be seeing all sorts of stuff, PE, real estate, you name it.
Yeah, that's super interesting. I mean, people have been talking about tokenization forever, and I'd love to see it actually materialize. There's a question on XRP. Does it have any uses beyond banking transactions?
There's a contingent of folks that love it for whatever reason, and historically that's been the case. And again, retail people are very tribal with just like anything, and they love ETH, they love Sol, or they love BTC, or they love Ripple. That's just kind of the way it is.
And then the other one that I hear about, and I'm actually friends with John Wu, who runs Ava Labs, but Avalanche, I feel like that seems to be in the news every now and then. I don't know too much about it, but would love to get your thoughts on Avalanche real quick.
Yeah, again, if we think about Sol versus the world, Sol, you can sort of do everything on Sol, Solana, the network, which is why, again, people love using it. There's less friction. It's not cumbersome. When you go out of that universe and you look at something like AVAX, and we're talking about the P chain versus the C chain, and we're talking about, I'm blanking on the name of it, but the separate network from the main network, it's a little more cumbersome. Yes, it could still see a benefit, a tailwind from tokenization, absolutely. As could Ondo, as could many networks that have smart contract capability. It's just, I think Ethereum at this point has solidified itself amongst the others, amongst the competition, just because it's been around for so long. And at this point, I think it's become sort of a household name.
Super interesting, Josh. I feel like I've got a lot of research to do when we get off this call. But yeah, thanks for taking the time. We'll have to think of a good follow-up to this. maybe as there's more clarity around the Clarity Act, might be a good point in time to check in. But thanks everyone, and thanks again, Josh and Stephen.